I think credit is the foundation of our capital markets. And I think if you look at the size of our banking institutions and the evolution of our capital markets, the underpinning is credit. And I think if you look at why America is so successful, it's because we have the best capital markets in the world. And it all starts with credit. And credit was really understanding risk across industries, right? Because when you think about how credit and equity kind of coexist, ultimately they're just derivatives on the underlying performance of an asset. Mm-hmm. And if you think about slicing and dicing asset returns, and you think about how much risk you need to take in order to, or how much return you need to get in exchange for how much risk you're going to take, right? I think you can start with the asset. What is the asset likely to return? How volatile is that? And then you figure out, how am I going to price the risk? And I think senior secured risk in credit is a business that you can be in and day out. I think unsecured investment grade risk is a risk that you want to take sometimes when it's cheap, and then when it gets too tight, you want to not be involved. And I think high yield bonds are the same. If you look at the returns over 10 years ago, at the end of 14 to the end of 24, mm-hmm. and you look at US investment grade bond returns on Bloomberg, the index, cumulatively, you will have made 28% over 10 years, which is less than 3% per year when you take into compounding. If you own high yield bonds over that same period, you would have made roughly 65% according to the Credit Suisse high yield bond index, that's now the UBS index. If you would have owned the senior secured loan index over that same period of time, which you have seniority to the unsecured high yield bonds, you have floating rates, so you don't have interest rate risk, that's closer to 67, 68%. So I've always thought that credit business at the top of the capital structure was a really good business.